Hi and welcome back to Cheeky Crypto. My name is Nick and today, guys, we're going to be jumping down into the world of Cardano's ADA, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will stay up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay guys, let's get right down into this one. There's a lot to talk about. We'll take a look at the kind of the micro stuff just here on the hourly chart to start with, and then we're going to progress on into the larger time frames to give you a bit of an idea of where the macro is heading. So here we have ADA paired up with USDT, hourly chart. Binance is our data source. As you can kind of see, we had this 5-wave structured move to the upside. Okay, this is a pretty decent area. We kind of find ourselves up in this supply range just here. This range is targeted out at 41.49 and 43.30. So that is exactly where this supply range is. So basically, a supply range is an area where a lot of people tend to do selling. That's why we call it supply zone. Essentially, it basically means highly likely that a lot of sell orders are in this range. Okay. Now, if I zoomed out just a little bit further, you can see that we had that great low point, which we did enter a little bit too early. At least I did, and many of the people in the Discord actually got in at much favorable positions. But we have seen that fantastic swing trade push us up higher. Now, we haven't breached as high as 44 cent, which is our A-wave origin on this side. And as you can kind of see, we are still looking at moving down towards my white squiggly line here. Let's get rid of that one. So you can kind of see just down here, this is kind of the expectation. If we do go up higher than 44 cent, it does not necessarily mean that this is an impossibility. It would be an irregular situation to find ourselves in. There is a bit of a macro move to the downside that is required. We'll talk more about that as we kind of progress in this video. And on the smaller time frames, it does look actually pretty bullish. So we kind of want to acknowledge what it is. Okay, it does look like there's still more room to the upside to be had here. And we're going to kind of see what that might look like. Okay, so before we can go up, we do have to go down just a little bit further than we currently are. We can see that we're currently trading above 38.54 cents. Let me just show you a couple of these wave structures. I think essentially what we're really looking at is a bigger macro like this one, just taking us down a little bit lower than 38.54 cents. Okay, that's kind of what we're looking at. Now, when we start drawing up all the micro counts inside there, we can kind of see that we have 1, 2, and 3 there, or A, B, and C. We can kind of see here A, B, and C. All of these are pretty standard, so there's nothing too unusual going on with these. It's just basically a string of corrections being pulled next to each other. And right now, we've got a double bottom scenario. Let me go ahead and pull on a line right here. You can kind of see this at 38.93. Okay, this area right here is kind of a double bottom because we should actually be thinking of this as a 3-wave structure going here, here, and then here. Okay, and then we'd end up with that bearish double top, like we'd have this bullish double bottom. Okay, and then we'd potentially break down and finally finish that move off. Now, for the most part, it's actually quite unusual. It's quite irregular to kind of see this kind of long-winded sideways trade, because essentially what we're doing here is we are trading between the low of our C wave on this side, right, at 38.54 and our high of our 5th wave at 42.13. Okay, essentially all we're doing is trading sideways. Now, on this hourly chart, we are, of course, oversold. On the 4-hour, we're oversold. On the 8-hour, we're oversold. You can kind of get the idea. We're looking for this progression to the upside. And whereas there is no guarantee that we have to move on down, I think it's important that we kind of reflect on the fact that it is highly likely that we do. With that being said, though, there are a couple of counts, wave counts specifically, that allow us to take into consideration that maybe we've already started our next move upwards. Okay, let me show you what that looks like. So we have this 3-wave correction over here. We had this 3-wave correction up, and then we had this kind of 3-wave correction coming down here. Now, this here could be argued that we just had this kind of, movement to the side, this sideways ranging market, and we've started this really nice run here. This move up hasn't got a decent 3-wave count to it. But in fact, we can see that we haven't breached this low, not yet anyway, at the 38.93. If we were to lose it, then this is going to be void. But if we stay above this level and we start to get a good run, considering how oversold we are, we might end up starting our 5-wave structure here, and we go 1, 2, up into 3, 4, and then 5, and we breach that 44 cent. Okay, what we're trying to do is marry up our 5-wave structure here with a corrective structure in the middle, and then another 5-wave structure. Now, personally, I don't think this is going to be something that we're going to see, and this is just something that I think is possible. And the reason that I don't think it's going to happen, and why I still think that actually we have to go down before we go up, is that we are looking for 3-wave correction. Okay, our zigzag pattern dictates that we must have a corrective structure in the middle here, and instead all we currently have is this kind of choppy sideways ranging market, which at the moment doesn't really give us a nice clean 3-wave structure. So overall, I still think we have to come down just a fraction more before we can have that growth that we know can happen. Okay, so I'm going to keep an eye on it and see how it kind of goes, but on the micro, I'm expecting just a little bit more to the downside, nothing too much, and then we can start to talk about that progression to the upside, because I do think there's a high probability of piercing higher than 44 cents, which of course would mean that this low point down here would have to have a different structure and all that kind of stuff that goes along with it. Okay, so we're going to keep an open mind as to kind of what forms out here when it comes to Cardano's ADA on these structures. We're going to follow these micro moves, and then we're going to nest in the bigger ones and see what actually kind of materializes. Let's move on. We're going to talk a little bit about smart money concepts. Let me just clear out some of that noise. Okay, so on smart money concepts, we can see a couple of really interesting things. So the first thing that we can acknowledge, let me just grab my little arrow here, is we have a strong high. Okay, this strong high is indicated as such because on this daily chart, by the way, guys, this is the daily chart. This strong high up here comes in about 59.49 cents. It is basically this wick just over here is actually 59.48 cents. Okay, it's this high here, and it's a strong high because we are below the equilibrium. Okay, and essentially that is like the 50% level between discount and premium and all that kind of stuff. Now, there are some pockets of red just here as well. Okay, this is the resistances that we're going to be finding ourselves in. Okay, this is usually where those sellers are, the supply zones. This is where the selling is going to occur, and these green areas down here is where the buyers are. Okay, so we can see that when we come into this green area here, buyers took the price up. When it came down and retested, buyers took it back up. Likewise, when we come into this red area here, we can see that price went up, got pushed down, came up, got pushed down, got pushed down, got pushed down. Right now it got pushed down again, so you can kind of see that they get confirmation that this is where the sellers are. So with a strong high, that means that we have a weak low. Okay, you can't have strong in both directions. So we tend to find that one is weak and one is strong. And right now we have a weak low, and this is because we're below the equilibrium. Okay, so at the moment it looks like downward price pressure on our daily chart is something that we should be really concerned with and cautious of. Okay, so a break to the downside is something that we need to be aware of. Okay, now on our smart money concepts setup here, it does look pretty bullish. Okay, and the reason for this is that we can see a really nice run to the upside here. Okay, but it doesn't really give me confidence when I start to try to do the wave counts on the smaller time frames. It doesn't give me that kind of confidence to think that we have a nice 53535 Elliott wave theory trend-based structure. And we haven't really got a break of structure or a change of characteristic to the upside from a smart money concepts yet either. So although this is a great start, it hasn't really changed much about the bigger macro, not at the moment anyway. Now, as I come up into the weekly time frame and bring this down just a little bit, you can see that you have a weak high. Okay, and you have a strong low. These are, however, quite a distance away from each other. As you can kind of see here, we do have a lot of gaps that haven't yet been filled. And we did fill a load, by the way, guys, because on our way up, we would have had this gap just here. We filled this one in. A lot of people, when you were talking about $3.20, would have been saying there was no way that we're coming down to 62 cents or 40 cents or anything like that. But here we are with it. You can see that the next stops really on this journey are the 21 to 23 cent range. You can see that we kind of came down briefly into this range, but we didn't quite hit it. A little bit lower than this, we find 16 to 18 cents or 19 cents more specifically. And this also happens to be a big area of buying pressure. I mean, check the size of this thing out. Lots of buying pressure here. Now, the other thing that's really important to understand is that we have these minor change of characteristic here and the minor break of structure here. Now, on this macro chart, the big takeaway is that we had a break of structure down here, this reddish bearish one, right? And then we got this change of character here. This is a big solid line change of characteristic that occurred back in July of 2020. Okay, we saw the retest to the downside, and then we just saw break of structure upwards, break of structure upwards, and break of structure upwards, right? So we know that there's good growth potential here. And this main change of character hasn't been seen on the downside. That means that this is still a very strong macro bullish movement to the upside, even though we've had a nice healthy correction to the downside. Okay, so I still expect further downside. I still expect some nice, retracements and some good prices on Cardano, but I do think there's a little bit more room to the upside before we maybe can see that. And that actually then ties into the bigger macro piece of thinking that there's some progression to the upside to be had. Now, on the stochastic RSI, we are overbought. Okay, so although we on the smaller time frames, we can see some bullish setups and we can think about the price moving up. Those things are fantastic. It's great to see. But on our weekly chart here, we do actually know that momentum is going to have to shift to the downside. The last time the price was as high as this, well, the last time it was overbought in this way was August of 2022. Obviously, that led us down into new lows, right? And obviously, we can take knowledge that we are lower now in price than we were back then, although we are higher on our stochastic RSI. This is a divergence, okay? So let me go ahead and show you what this looks like on our weekly time frame. Okay, so here we have our highs going higher on our stochastic RSI. And whilst that is occurring, we have ourselves some lower highs on price. This basically tells us that momentum was shifting upwards, but the price just hasn't been able to reflect any more than it currently has. This basically tells us that there is lack of momentum to the upside. You've got to understand how an oscillator such as a stochastic RSI works. Essentially, if it's overbought, it needs to cool off, price needs to go down, even if it is just a small amount, in order to correct the momentum. So momentum is at a peak right now, and it should be shifting to the downside. We should start to see some selling pressure mounting. Now, the time before this, we were even higher up here in March of 2022. And if we draw a line from here, from March 2022 through to where we are, we see consistent highs on our stochastic RSI with consistent lower highs on our price chart. Okay, so although we did technically break up out of this trend line here, okay, to the upside, our oscillator is telling us that actually momentum should be shifting to the downside, and we could be retesting some of those lows. So we don't want to get too excited. We can't be thinking too much about, thinking that we're going straight to the moon. But I do expect a little bit further to the upside, possibly up in that resistances of around 50 cents will be very interesting. You can kind of see it on this chart right here on the weekly. This red area is going to be a major supply block for us. So we could get smacked down from there. Now, when we take a look at it from an Elliott wave theory point of view, there's lots of different ways we can kind of try to analyze it. Going up higher than 44 cents will basically mean that we did a double zigzag and we don't have to worry about a triple zigzag or anything like that. And that's a positive. But, we should reflect on the possibility that we end up with a WXYXZ scenario, which could just take us down into some of these, fair value gaps that were left behind, these imbalances in the order books. And obviously hitting into this major discounted range down at the bottom, which is where most of the buyers are looking to scoop up some ADA. Will be interesting to kind of see how it all plays out. Let me know what your thoughts are down in the comments below. I'm going to leave this one right there. If you found it useful and informative, smash the like button. I do appreciate that. If you're new, subscribe, and don't forget to join us down in Discord. Until the next one though, guys, have a fantastic day.